Good morning, good evening, good afternoon, wherever you are located on planet Earth. Greetings. It is time for pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we put right in your hand each and every trading day. Well, hopefully everyone had a very, very nice, relaxing, and peaceful weekend, chilling with the friends and fam. But now it's time to get back to business. Yeah, we got a lot to talk about, family. We got a lot to talk about. We're going to have to deal with some stuff today. Yeah, we got some things to deal with today. Also got some funny things to talk about today as well. You know, I like to mix it up. You never know where we're going to go. None of this stuff is pre-scripted. It's just fresh off the dome. And this is just how we do. This is what we do. We get it in. We get it in. We get it done here on the Pulse Wave Live. All right, so as you know, first and foremost, it's time to get into these overnight markets. Dow futures up 22 points at 26,542. NASDAQ 100 up 51 points at 10,673 half. E-mini S&P 500 up make that 3 points now at 3217 even. Russell My Hustle down 1.5 points at 1467.7. Bitcoin futures composite index trying to hang in there, man. It's down 15 bucks at 91.80. 91.60 is the overnight low. 92.80 is the overnight high. Still maintaining to remain above that 9,000. You do not want to see 9,000 taken out on a close. You don't want to see that, family. You don't want to see that. Nat gas down 2 cents at $1.69. Crude oil is down 22 cents at $40.52 a barrel. Long bond is getting stronger. That's right. Long bond is getting stronger. Right now, the long bond is up 22.30 seconds. Now trading at 180.13. That's 180 and 13.30 seconds. All right, so bond prices are starting to rise a bit here, which means your yields are falling, which means rates are coming down. You can expect at least a 1/4 point rate cut today as far as your mortgage is concerned. For those of you that are looking to buy a house, interest rates should be at least a 1/4 point lower than they were Friday. Those for looking to refinance, same thing. You should be looking at the possibility of at least a 1/4 point difference in the interest rate from this previous Friday. Those of you who are floating rates are liking this right now. It's looking like this little bump up here could continue. And that's going to be interesting because the bond markets are looking quite shady right now. And it will prove difficult for the Fed to keep rates at zero if bond prices are exploding higher. So that's going to be a very delicate dance and one that will be interesting to see how they do it. Now, if all things being equal, unless there's some kind of event this morning, the long bond is set up with what is called a bullish 2-bar Charlie on the day, which means you can expect an all-day up day, and you can expect this market to close in the green at 4 p.m. Just saying. Looking at gold futures are up $8.70, trading at $1,818.60 per ounce. But that's not the real story, ladies and gentlemen. The real story is hi-ho, silver away. That's right, silver breaking the $20 handle for the first time since 2016. That's right, gold futures up 34 cents, trading at $20.11 an ounce. after just hitting $20.15 an ounce just moments ago. Silver is powering up. If you're long silver, you are really happy and excited at the moment. But on the back of all of this, what do we have? The dollar, the US dollar index, has now officially broken into the 95 handle. It is getting weaker by the moment. The dollar is in peril. It is now flat at 95.94. We hit an overnight low of 95.73. Overnight high was 96.17. What up, dollar? What's going on, man? What's going on? Oh, what's up to everybody in the live? You can go ahead and smash that like button. Dorito, is that a stock ticker, GAXY, that you hitting me with? Let me take a look at that. Let me take a look. Let me see what's up. See if it's one we got here in the report. If not, I can add that for you, fam. Let's see. Yep, I see you, Galaxy Next Generation. All right, all right. Looks like it's traded over the counter on the pink sheets. So let me just see if that is already in the thing. Oh, it was not. I just added it, which means you will see this on tonight's report as long as it's not a new security, as long as it has at least a year's worth of trading history on it, then you should be able to see it populate in the report tonight. It should be on your dashboard under the U.S. Equities Reports tab. All right, moving right along. We got the euro dollar. It is down 13 pips at 114.39. Pound sterling up 65 pips at 126.38. The Aussie is off 3 pips at 69.99. Canadian dollar is off 13 pips at 135.65. And the euro yen is up 12 pips at 122.37. Dollar yen up 14 pips at 107.16. And the Kiwi is up 1 pip at 65.58. Switching our focus to food, you would expect food to be powerful today since the dollars come off so much, but nah. Beans are up 3 1/4 points. It hit at 8.99 3/4 for the overnight high. It's currently pulled back to 8.98 1/4. Corn is actually down 2 3/4 points at 3.37 even, and wheat is the big story. It's down 6 1/2 points this morning, trading at 5.28 1/4. So it's fallen out of the 5.30 handle and now dipped back into the 5.20 handle. So that is our overnight picture. Now let's take a look at the overnight news affecting markets today. All right. So here's what you need to know. The EU is deadlocked over its proposed $860 billion coronavirus rescue package as a group of frugal nations stall the talks. The European Union's top leaders remain deadlocked over the size and scope of a proposed rescue deal for the bloc as it responds to the COVID-19 downturn. Excuse me, I must drink some water. All right. Excuse me. Chevron nears $5 billion takeover of Noble Energy. Chevron is close to a deal to buy Noble Energy for about $5 billion and what would be the largest oil patch tie-up since the coronavirus pandemic delivered a shock to the industry, the Wall Street Journal reported on Monday. A glove maker's stock has skyrocketed 1,000% since April, surpassing Tesla's gains. A Malaysian glove maker stock has soared 1,000% in less than 4 months as the coronavirus pandemic continues to lift demand for protective gear. Veteran strategist Ed Yardeni says U.S. stocks are overvalued. No kidding. and hence investors should go global to find buying opportunities. Yardeni warned that U.S. stocks are overvalued and could face a shock if COVID-19 cases continue to surge and ripple across the U.S. and tensions with China accelerate. Wall Street's biggest influencer says Warren Buffett might look out of touch, but that's a key element of his success. Why do they keep feeling the need to have to, what's the word I'm looking for here? Become a Warren Buffett apologist. Why is everyone feeling the need to do that here on the street? The man is not the Messiah. He is not a prophet. He is not God incarnate. Why do they feel the need to have to become Buffett apologists all of a sudden? Stop making excuses for this dude. Warren Buffett took cover during the coronavirus crash because he didn't know how the pandemic would play out. No one did. That's the whole beauty about trading in these markets. Wall Street's biggest influencer suggested in an interview with Business Insider this week. Why do you give him a pass? Because he's Warren Buffett? If any other money manager stood on the sidelines and took no opportunities during one of the biggest market opportunities in our lifetime, that is what we call inexcusable and dereliction of duties. So I don't understand what the man means on that front. I don't get it. Mortgage rates fell below 3% for the first time ever this week, but it's not smooth sailing for home buyers. For the first time since they started being tracked in 1971, mortgage rates have fallen below 3%. Disney has reportedly slashed its Facebook advertising budget amid a big business boycott of the social media platform. Disney has slashed its advertising spend on Facebook and Instagram amid a boycott of the social media platform led by civil rights groups, the Wall Street Journal reports. They're not civil rights groups, they're terrorists. Stop making excuses for these people, man. It's terrorism and Marxism under the guise of socialism, but it's really Marxism and communism and totalitarianism. They just want to be the ones in control. That's it. No more, no less. Chinese stocks climbed around 30% on Monday, while stocks in Europe are mostly down and U.S. futures are pointing to a slightly lower open. All right, earnings coming in. Julius Baer and Nobia, second quarter 2020 earnings are coming in. On the economic front, the U.S. 6-month and 3-month T-bill auctions are due. All righty, now it's time to go in. Y'all ready to go in? All right, let's start off with some laughter, because laughter is, of course, the best medicine. Get your short sale tickets ready, fam, as another one bites the dust. Quality control hell. Tesla's Model 3 bumper is falling off more than expected. I'm sorry, dude can't build a car to save his life. First, his windows shatter in an armored vehicle demonstration live, mind you. Now the bumpers are falling off the car, and his stock is $1,000. Really? Really? We're not surely exactly how expected it should be that a bumper should randomly fall off of a car at any given time, but we digress. Let's just ignore that bit of common sense and focus on the fact that Elon Musk, the man who wants to implant chips into people's brains to cure cognitive diseases, seems to be having an awful lot of trouble manufacturing a car that doesn't disintegrate while it's being driven down the street. Yeah. You know what this is reminiscent of for you young people? This is way before your time. But there used to be a car that was notorious for having these kind of problems. If for the longest time it was Ford, which stood for fix or repair daily. Then after they kind of waned in the news a little bit, you had a new one. You had Hyundai. It was not uncommon for their transmissions to fall out of the car while the car was in motion. And that is not, I repeat, that is not an exaggeration. That is something that actually happened. Yes, back in the day. Our friends over at Inside EVs released a scathing piece this weekend about Tesla's Model 3, noting that the car's bumper had a tendency to fall off at a rate that is more widespread than expected. Sorry, I've had several cars over my lifetime and none of the bumpers fell off. So I don't even know how that's supposed to be something that's expected nowadays. Really? So quality control has plummeted that much? Which goes back to my earlier thesis that the quality of things being manufactured is at an all-time low, especially with electronics and video games. And we credit the blog for posting the story despite getting obvious pushback from Tesla cultists. An article that exposes issues from Tesla gets apologists claiming it is irrelevant, regardless of what it is. The story would be an attempt to harm the company. As we already explained, it is the opposite. It is an effort to convince it do the right thing, the blog said. The blog shares 3 different horror stories of bumpers flying off that were sent to the blog after they posted their first article about a Model 3 bumper flying off. In all 3 cases, the owners were told by Tesla that the repairs would not be covered. So now they're not even standing by their product. They have no morals when it comes to their product. They're saying it's your problem. The first owner recalled, quote, I was driving through a puddle that was about ankle deep when I heard a loud thud coming from the back of my car. When I looked out through my rearview mirror, I could see my bumper laying on the road behind me. My friend, who was in another car driving in front of me, went through the same puddle without issue. I was able to get the parts that fell off my car home through the help of my friend and some people who were in the area at the time who loaned me their tools. The next day at home, I assessed the damage and reattached the bumper more securely. End quote. When he brought the issue to Tesla, who seemed at first like they would help him, they eventually told me that they actually wouldn't be able to fix it despite having ordered all the parts. Wow. A second owner wrote about this bumper. Quote, just another statistic for you. The same thing happened to my model, my early Model 3, left rear then 26 something. Last month, June, when I drove through a puddle a little larger than this on a one-way road, both lanes were flooded. There was no place to turn around and not really enough warning to make a turn prior to encountering it. With heavy traffic behind me, my car is still sitting at the body shop. End quote. Wow. They simply told me it wasn't something Tesla would cover. The second owner said after he took his vehicle to try and get repaired under warranty. A third owner said, I was driving to work in low traffic and heavy rain. I take 2 major highways to get to work, I-35 and President George W. Bush Turnpike Tollway, both in Dallas, Texas. After parking my car, I saw that my rear bumper was hanging by one bolt in the left side. The whole bumper was dragging on the road for who knows how long. Wow, end quote. Good grief. Tesla claimed they couldn't make repairs to his vehicle because he was driving 100 miles per hour when the bumper came off. How can I drive 100 miles per hour in heavy rain and live to tell the tale beyond me? Yeah, that's a good question. Recall just a few days ago, we posted a viral video perfectly demonstrating exactly the type of quality one could expect from a vehicle made in an outdoor tent. A video of a Model 3's bumper flying off while driving in the rain went viral last week. Hilariously, pro-Tesla blog Electric describes the bumper flying off as a known issue as if when it rains, the bumpers of Fords and GMs fly off randomly while driving all the time. They wish. The video has garnered over 1 million YouTube views in just a matter of days. In 2018, when Tesla was still ramping up production of the Model 3, we reported on several owners who had issues with the rear bumpers falling off after driving through rain or water puddles, the blog wrote last Wednesday. Although the company said they were investigating it, here we are in 2020, and it still appears to be a major issue. The video description says, I was driving my Tesla 3 in the rain with two other people in the car when all of a sudden we heard a big boom. I pulled into the nearest parking lot, went out of my car to check what happened, and I was in total shock. Recall back in 2019, we wrote about a flaw that had allowed 35 pounds of dirt to get trapped under a Model 3 bumper in Canada. The Model 3 was found to have a design flaw in its underbody that caused the car to trap and retain dirt, water, and sand from roadways. Back in 2019, Electric was making excuses for Tesla still, saying that the company has often been accused of designing cars for the Californian climate and that water, dirt, and sand used to de-ice roads in colder climates are susceptible to getting trapped in the underbody of Model 3 cars. Yeah, but we don't have that problem with any other car. So why do they get to get away with that? That's the opening bell for those of you that need to handle some business in these markets. Short Tesla. All those that have a bearish outlook on Tesla, this is ammunition for you right here. Right here. Right hither. Robert, if you're listening, you might want to check out Tesla here on the open. Another one says, I wish Tesla would address this, but the automaker doesn't seem to respond to media inquiries anymore. Electric editor Fred Lampert bemoaned at the end of his article about the issue. Now you know how we feel, Fred. That is hilarious. I must say, absolutely hilarious. So this is what you get, folks, with a lot of manufacturers these days. They are not held accountable. They don't have any pride about their products. They don't stand behind their products. And when there's an issue, they either try to explain it away or just say, I'm sorry, that's not covered. So yeah, this is what you're dealing with, people. And it's sad. Nintendo, I hope you're listening to this with your Joy-Con drift. All right, it's been out for several years and you still haven't fixed the issue. All you've done is give lip service to it. When are you going to fix the Joy-Con drift, Nintendo? Fix your products. What's wrong with you? All right. Next, we got a little bit of humor out of the way. But let's talk about silver a little bit. Why is it hitting $20 an ounce? Why is it rallying as we're talking? It is rallying. It is on fire. Why is that? It is hitting $20 for the first time since 2016. And do you think it's going to go much higher? I think it might. I think it might. Now, gold is more money-like, and silver is more commodity-like. But consequently, the relationship that we follow involving the gold GNX ratio, which is the gold price relative to the price of a basket of commodities, also apply to the gold-silver ratio. In particular, gold, being more money-like, tends to do better than silver when inflation expectations are falling or deflation fear is rising. And economic confidence is on the decline, which it is because last week we got that Michigan consumer sentiment report, and it was worse than expected. Now, anyone armed with this knowledge would not have been surprised at the collapse in economic confidence and the surge in deflation fear that occurred during February and March of this year was accompanied by a veritable moonshot in the gold-silver ratio. Nor would they have been surprised at the subsequent rebounds in economic confidence and inflation expectations have been accompanied by strength in silver relative to gold, leading to a pullback in the gold-silver ratio. I have to tell you, folks, everything you want to know is factored into the price, and it tells you everything you need to know. All right? All you got to do is look. Now, some people are expecting a modest recovery in economic confidence and a big increase in inflation expectations over the next 12 months, meaning that we are experiencing the fundamental backdrop to shift in silver's favor. And as a result, we are intermediate term bullish on silver relative to gold. We don't have a specific target in mind, but as mentioned prior, this is back when the gold silver ratio was about 105, and in upside blow off mode, it isn't a stretch to forecast that some point over the next 3 years, the gold silver ratio will trade in the 60s. Be aware that before silver commences a big up move in dollar terms and relative to gold, there could be another deflation scare. If this is going to happen, it probably will do so within the next 3 months. Although we hasten to add that any deflation scare over the remainder of this year will be far less severe than what took place back in March. But again, there's an issue with long-term projections. Long-term projections are difficult. Remember, we always talk about the price-time differential. It's very difficult to marry price with specific time. You can anticipate price by itself a lot easier than you can when you try to combine price with time. It's just the nature of the beast. There's not too much you can really do about it, ladies and gentlemen. It just is what it is. You know what I mean? All right. So with that being said, what you should be looking at now is the possibility of another market decline. All right, that's what you should be looking at. And I'm talking about the stock market. As far as gold and silver is concerned, right now, gold is locked in. And it's kind of messed up because it's locked in a corrective state. But silver is locked in on a forward upward trajectory. So it's kind of lagging behind gold. Gold had its burst, got above 1800, while silver was still struggling. Now silver is locked in, and so therefore I think that the way that the markets are looking coming into this week, it's looking like any kind of pullback that we might see in gold could be a little muted right now. So it's just an interesting overall picture that we're looking at right now, but still both gold and silver are still remain in bull markets. So I think that we're going to see a possible continuation on both of these. Now it should be noted that that silver is pulse waving this morning. All right, pulse waving heavy, looking good. However, gold is kind of pulse waving too. I would need to see a lot more upward trajectory today in gold. If I can see it, then we'll know. So I'm just waiting to look. If you look at if you go to your dashboard and take a look on the futures tab, you'll see what I'm talking about. You'll see what I'm talking about. So right now it needs to meet the intraday price inflection point on the weekly. If it can do that, then the downside is done. We put in a short-term bottom, and gold should be able to move, higher from this point. So it's all about trajectory for right now. We're just looking at the trajectory going forward. And really, we didn't really have a lot looking at futures and forex. We didn't really have a lot of rally and crash alerts from Sunday night projected for today, save one, and that's nat gas with a crash alert, secondary crash alert. And as we speak, when we start this off, you could see already nat gas is falling sharply. It's now down 7 cents. So it's doing what it's doing. It's now at 164. It just hit 163.7. So yeah, again, you ignore rally and crash alerts at your own peril. All right. Now let's see here. I wish I had some music, but I don't. All right, let's take a quick commercial break. I know it sucks, don't have music, but give me 1 second. All right, and now we are back. Sorry about that. One of these days, I'm going to get some music. So when we take a commercial break, we'll be able to play some music, whatever. All right, so now I'm back. So, time to get a little bit more serious. But before we do that, isn't it funny that Tesla wants to stick chips and stuff in our brains, but they can't even make a decent car? And we're going to trust them to do brain surgery? Really? Really? Hilarious. All right. So, as you know, housing starts and permits disappointed um, last week, and we have tumbling demand for city dwelling. People are starting to abandon the city. Just enough for the city. People are jumping ship. After May's big rebound in both starts and permits, June was expected to show further recovery in the U.S. housing market, will start surging far more than permits as mortgage rates plunge to record lows. And while both housing starts, we got a plus 17.3% month over month, and building permits were plus 2.1% month over month, they rose notably. They both missed expectations by a mile, though, plus 22.2% and plus 6.3% respectively, through revisions impacted that spread notably. Now, the V-shaped recovery is already stalling out. One of the big drivers of this disappointment was the clear evidence of an exodus from city living or rentals. Single family home permits were up 11.8%, Multifamily permits were down 14%. On the housing start side, less forward-looking than permits, single-family units rose 17.2%, and multifamily units rose 18.6%, as the Northeast exploded 111.8% from 49,000 SAAR to 105,000, with single-family starts in the Northeast jumping to the most it's seen since 1990. But starts remain lower year over year. And all this as home builder sentiment surges back towards record highs. Here's where this is going to hit a brick wall, ladies and gentlemen. Case in point, drum roll please. New York City landlords slash prices on third of rentals as New Yorkers flee. Run for your lives, flee, abandon your posts. More than 1/3 of New York rentals were discounted during the second quarter as demand continues to slump thanks to the economic effects of the COVID-19 pandemic foolhardy lockdowns, including the flood of workers telecommuting instead of vying for limited rental space downtown. According to Fox Business, rent prices were discounted an average of 6.7%, which is about roughly $221 per month, across 34.7% of New York properties in Q2, with rents at higher end apartments experiencing the highest cuts as wealthy buyers have flocked to the suburbs since March. That's right. Now, if you see people of means and in the know doing the opposite of what you're doing, that should tell you that you are wrong and you need to re-examine what you are doing. Demand will remain low as new hires, interns, and students begin jobs and school remotely. Now, as many New Yorkers escape the city temporarily or permanently, said Street Easy economist Nancy Wu, as investors pile up due to this lack in demand, even more landlords will need to make rent cuts and rents will likely drop even further. This should be worrisome for anyone who is a New York City landlord. Now, the second quarter of 2020 marked the first time since the Great Depression that there was a year-over-year rent price drop in the metro. Meanwhile, Street Easy saw an uptick in interest in Manhattan's outer boroughs of Queens and Brooklyn. Wu said remote work makes commuting an insignificant factor in choosing an apartment location, which helps explain an increase in interest in Queens and Brooklyn. That's a trend that will continue as long as social distancing orders are in place, she predicted. Rent prices rose in both areas during the second quarter, although at a modest and slower pace. Now, according to Miller Samuel Incorporated and Douglas Elliman Real Estate, Manhattan leases dropped 35.6% in June versus the prior year. Wow, that's huge. Which follows declines of 37.7% in March, a record 70.9% in April, and a 62.2% drop in May. This comes as Manhattan apartment sales dropped by 54% in the second quarter, the largest percentage decline in 30 years, according to Elliman. Median sale prices fell 18% to $1 million, their largest price decline in a decade. Man, Joni, I know you glad you got out when you did, huh? Woo! In April, we reported that New York City lease agreements had plunged 38% in March, year over year, the second largest drop in 11 years. Not going anywhere. New leases in Manhattan had their biggest decline in more than a year. Weeks later, it was noted how retail rents have dropped 20% across Manhattan. And according to Street Easy's Woo, the Flatiron area saw the biggest portion of reduced rents at 45%. I tell people are fleeing the cities, man. Look, this is just not New York. It's not just New York City. It's not just New York City. People want out. They're getting out. They're running away. They don't want to hear it. They're saying no, no more. We're out. No mas. Can't take it no more. Too much. Too much is happening. Too much has been done. No way. Don't want to cut losses and bounce. And I get it. I get it. And it should make you think about it. It should make you think about it. Now, here's something that is very interesting. I hope you are listening and paying attention because this may affect some of you. 20,000 Robinhood traders are in for a rude surprise as CBL prepares to file Chapter 11 bankruptcy. Bloomberg reports mall operator CBL and Associates Properties Inc. is preparing to file for bankruptcy. The headline hit after hours on Friday, sinking shares by at least 20%. Sources told Bloomberg the company has been negotiating with its lenders in an effort to enter Chapter 11 with a consensual restructuring agreement in place. The plans aren't final and elements could change. CBL's portfolio has 108 properties, totaling 68.2 million square feet across 26 states. Many of the properties are classified as Class B malls, supported by a middle market consumer base that has been crushed by the virus-induced depression. CBL fired a warning shot on June the 5th and said tenants across 108 of its properties paid just 27% of April's rent. The loss of rental income forced the mall operator to skip interest payments due on $3 billion in debt. On July 16th, it entered forbearance agreements with debt holders concerning 2023 and 2026 notes. CBL bonds maturing in 2023 traded a bid-ask around 24.6 to 25.4 cents on Friday, according to the latest bond quotes via this is Refinitiv. When CBL files, it would mark the largest commercial real estate bankruptcy of the pandemic. Thousands of stores are closing this year, further accelerating retail apocalypse, expected to be a record year. Meanwhile, Robinhood traders with no concern about the unprecedented surge in the new CMBS delinquencies have been panic buying CBL shares. From the start of lockdowns mid-March, new account holdings surged from 8,000 to more than 20,000 on Friday, at 1.5 times the increase in 4 months. Come Monday morning, which is today, thousands of Robinhood traders who panic bought yet another bankrupt company are going to be transformed into instant bag holders. You see, ladies and gentlemen, let me explain something to you. When it comes to trading, it's not about, oh, let's find something that is in decline and destined to go to zero and buy it because you know it's going to come back. That's gambling. That's how gamblers talk. That's not how traders talk. Traders are not married to any particular company. They're married to the trend. If the trend is down, they're shorting. If the trend is up, they're buying. They're trying to take value investing type principles and apply it to the wrong companies, to the wrong shares. Value investing is not buying bankrupt companies. I don't know who told you that. You need to go back and reread the book on value investing. I forgot the dude's name, but it's like the Bible of value investing. You guys know what I'm talking about. You can Google it. That's what they do. All right. But you got to know how to do what they do. All right. What they do is more of a econometric modeling type of a situation, but it's really intense on getting under the hood of a company and looking at balance sheets and debt and looking at product lines, and it's really intense. And then you try to find those companies that may have fallen out of favor or had some kind of temporary setbacks, but they have unlimited future potential. That's value investing. What they're doing, buying something that's destined to go to zero, is not value investing. That's called stupid investing. And it's also not trading. I have no idea what it is these people are doing. What's up with you young people? What's up? I have to say, man, it's one of those situations where if you don't have the pulse waves, I don't know. Lord help you. You're just out there dangling in the wind. 3 charts that show the shift from prospering online brokerages to retail day trader mayhem. The Robinhood effect is not only real, but is now flourishing thanks to the government handing out free money and unemployed traders sitting at home all day, passing the world's worst penny stocks and Tesla shares back and forth to one another with various cryptocurrencies, engaging in a version of pass the hot potato that is guaranteed to end in misery for all parties involved. But while COVID is catalyzing the change at a faster rate than ever, it was Robinhood's introduction to app-based trading and no commissions that shook up the industry and opened the floodgates to these new traders. I would not call them traders. I would call them want-to-be traders. In addition to influx of new traders, it has also shaken up the model for online brokerages who have had to match Robinhood's no commission policy to maintain their clients, now leading to M&A from within the industry. They're doing this by selling their order flow, which means worse fills and slower service for clients, while brokerage houses scramble to make up for the revenue they're losing from commissions. It's also why first-time traders are stunned to learn that their online broker routinely crashes during high volatility points in the market. I don't know about that. I would say you mean Robinhood, the app broker, crashing during big busy times with the market. I've been trading for many decades now, and I have not ever had that problem. So I don't know what they're talking about. All right. The brokers are too busy pawning off their order flow and trying to maintain a near impossible business model without trading commissions to actually spend money upgrading their infrastructure and bandwidth for volatility aberrations. I still don't. I haven't had that problem. I don't know what they're talking about. I don't know what they're talking about. I have not had that problem. Now, back in the 90s, when they were first designing all of this stuff in the early 2000s, there were issues and problems, but I don't know what they're talking about. Let's see here. Okay, the shift in the industry was captured beautifully in a series of tweets from Bloomberg's Morgan Barner, CFA, last week. First, she shows how trading volume has spiked significantly in Q1 and Q2 of 2020, obviously attributable to the COVID lockdown and the introduction of new traders who have followed the herd led by Barstool Sports' Dave Portnoy into the market. Next, she shows how Schwab has seen its revenue per trade collapse over the past 5 years as the brokerage has tried to keep pace or, in some cases, lead the charge for lower commissions to help bring in new clients. For all intents and purposes, commissions no longer seem to exist for stock trades and have been almost totally priced out of the industry. And if you look at Schwab, at one point back in Q4 2011, the average was about $12, per trade, and now here in 2020, it's like $1.89. Finally, she shows the interest in creating accounts continue to rise. Amongst the surprises we've seen during the COVID lockdown has been the fact that Americans are actually saving money and paying off credit cards instead of spending it, with the economy melting down and the government wiring them free checks. They're also putting this money into brokerage accounts, as you can see. according to the charts and statistics. This, of course, enabled by the Fed behind the scenes, doing everything it can to make sure that the NASDAQ continues to hit new highs, despite what has been an unprecedented economic collapse in the country. When the average American logs onto Twitter and sees the president, or worse, Larry Kudlow, bragging about the market despite tens of millions of people unemployed, we don't blame them for meandering toward the honeypot that our country's public markets have become. Unfortunately, what comes up must come down, and the new retail traders being lured into the market with promises of never-ending all-time highs in commission-free trades will likely be the first bloodshed when the Fed's Ponzi scheme is inevitably exposed for what it truly is and comes crumbling down. And that is 100% truth being spoken here in this article, 100%. Now, being that I worked in that capacity, I can talk. I can speak a little bit more authoritatively about it. All right. So this whole thing with the commission wars, is not a new thing. All right. It goes back. It goes back to the 90s. There used to be a time before the internet, before the advent of internet trading. There was a situation where you had to pick up the phone and call your broker if you wanted to do any kind of stock trading. And for the most part, people did not short the market the way they do now. It wasn't a big thing. Most people had no understanding of it and didn't want to do it. Plus, a lot of brokers were the middlemen. You had to locate shares, and then there was a high interest to be paid, and all this other stuff. And then back then, you had the uptick rule, so you couldn't short until the market got a uptick. So if the last trade was $52 and the stock is down $2 and 52 is the last tick and it's the low of the day, you say, oh, I want to go ahead and sell it here. And you can't. You got to wait for an uptick before you could put in a sell order. It was just a bunch of nonsense and red tape back then in those days. Now, as far as commissions were concerned, commission wars have always existed, especially in the commodity futures markets. There was a time back in the day when for trading equities and trading commodity futures, it was not unheard of for some people to be paying $200 per round turn or even more. A round turn is an in and out. So if I buy Tesla today, like an idiot, for a certain price, and then tomorrow I want to sell it because I'm getting smoked, that's a round turn. A round turn is an in and an out. So you could pay back in the day $100, $200, $300, depending on who you were brokering with back in those days. Commodity futures could be quite expensive too if you were doing what is called broker assisted trades versus doing it on your own. And even still, the average commission for broker assisted trades back in the 90s was about $65 to $70 a round turn. And then, of course, with the advent of internet trading, for which I sat on a pilot, I was one of the first people in the United States to actually place an online trade through a pilot system with what is called the PATS system. For those old heads out there, know what I'm talking about. And we were doing the E-mini S&P, the NASDAQ, trading with that, and the Dow futures too. So anyway, the average trade once the computers came into play was about you could pay about $7 a round turn. Then it got to where people were in a fight. It was like $4 per side, $3 per side, and that went on until the early 2000s. Then that's when interactive brokers came on the scene and said, "Hey, why don't you trade with us for $1?" That's right. Stock trades with us for $1. It didn't matter how many shares. And that shook up the industry. Then with futures, they were like, you could trade $1.50 a side, $2 a side with us. So they shook up the industry. Interactive brokers shook up the industry as far as stock and futures trading went. So they were tearing people up with that. And so then the commission wars got even hotter. Fast forward to today, now it's no commissions on stock trades. but they make that money up and doing other things, lending and acting like a more traditional bank, so to speak. So it's just a different game. It's a different face on the markets now. And then, of course, with this whole pandemic and the lockdowns, now you got everybody thinking that they're a trader now. Again, that's like if there was a sharp rise in migraine headaches, that would be like that's analogous to that. Or there's a sharp uptick in migraine headaches, therefore, dude quit his job flipping hamburgers at McDonald's and now hung out a shingle saying, I'm a brain surgeon and I can help you with your migraines. Exactly. You're going to trust someone who don't know what they're doing. So, it's great. We need more people in the market because it gives more liquidity to the market. We need these individuals. These individuals are the ones that keeps the light on. You want more Robinhood traders. It's great because they're a long-only platform. You cannot short stocks or anything else on a Robinhood platform. It's a long-only platform, which is fantastic. Since these guys like to buy when things are falling apart, that's great. So when I short Tesla at 700 and it falls to $95, I'm almost guaranteed that a Robinhood trader is going to take my trade and buy my shares of Tesla from me for $95 because they loved it when it was $900. So they're really going to love it $95. Meanwhile, they don't understand that they just bought me a yacht. And I appreciate it. I appreciate Robinhood traders. Don't listen to these people talk about y'all Robinhood. Keep buying these stocks as they drop to zero. Please. Please take the other side of my trade when I'm unloading my shorts. Please. We should all be thanking Robinhood traders at this point. All right. Now, I will say this, believe it or not. When you take a look with the overall, what's happening overall, truth be told, it's been difficult for people to make money in the markets using traditional means because the correlations in the markets are broken down so severely. You'll have days where everything is falling, stocks falling, gold and silver falling, crude oil falling, the dollar falling. It's like, where do you put your money? Bonds are falling. If all the safe havens are crashing with the stock market, where do you put your money? I hear someone say, "Oh, well, that's easy. You put it in Bitcoin or altcoins." Yeah, but they're crashing too. Now what? Every market crashing. What do? There's nothing you can do. There's nothing to do. If you're a long-only strategist, all you can do is buy. All you do is buy. If all you can do is take long positions, you're either getting your face completely ripped off in the market, or you're just sitting in cash. There's nothing you can do. There's nothing you can do. If you're using a platform like Robinhood, you can't do options. All you can do is buy shares and stock. So you have to be basically immortal and know when a particular stock price is about to turn. You have to be immortal, and you have to do that over and over and over again flawlessly. And since rookie traders cannot do that, even professional traders have a very difficult time picking tops and bottoms in markets. I don't see how the business model will be able to be maintained at Robinhood when the markets truly go into decline. Now, we had a limited bear market. It didn't last long. But what happens when there's a protracted one and everything's declining in price? See what I'm saying? So I don't know. All I can tell you is at the end of the day, everything's run by machines. So your machine better be superior to theirs or it's going to be hard for you. Speaking of which, to prove to you that the big boys also suffer, especially those that really aren't really good traders. They're just good at marketing, promotion, and taking advantage of loopholes in the law. There's one hedge fund manager who learned a very valuable lesson on when to take profits. You always hear me say, take what you can, and give nothing back. Never turn a winning trade into a losing trade. Learn how to trail your positions. Learn how to take profit. That's why we teach the POP method, at PulseWave Trading. Learn how to manage them trades. All right. But if you take a look at the article by Eric Peters, the CIO of One River Asset Management, he wrote something very interesting about learning to take profit, a lesson he learned back in 1992 before internet trading. Quote, "Let's step into my office," he said. So I did. He was my boss. The firm's most important client needs help. He said, I listened, uninterested, unconcerned about clients, their problems. Barely cared about my boss. I had a game to play, solo sport, and loved it to the exclusion of all else. They need to do a very large trade, he explained. A 26-year-old proprietary trader's mind is rather primitive, which is good and bad. Being young and dumb allows you to see things elders can't and take risks one rarely should. In 1992, I done both. They need to buy 300 million mark and lira. The Europeans established a mechanism to lock their exchange rates into narrow ranges to reduce market volatility and promote economic convergence. In theory, it worked. In practice, it didn't. Politicians named it the ERM. What would you like to do? He said. Calm. I stood there processing. Such a sum was extraordinary even before the ERM blew up, which it just had. For months, I brought options in anticipation of its demise. Honestly, it was obvious. The ERM encouraged speculators to build massive leverage carry positions, discouraged corporations from hedging exchange rate risk, suppressing volatility and interest rate spreads everywhere. The process was reflexive. Today's central bank volatility suppression regime resembles it. It will end in spectacular fashion. All such things do. I want to buy more, I answered. My foreign exchange options left me long, the exact amount our client needed to buy. No other bank would sell them such a large sum. So naturally, I wanted to own even more. You should sell them, your whole position, he told me firmly. I couldn't understand. It made no sense. Big customer orders like this usually mark the highs. Never forget it, he said. I left his office angry, irate, sold my whole position, and he was right. End quote. That's a good story, man, because I have to tell you, if you ignore market dynamics, you do so at your own peril. Things that you should know better and you go against that, you're in trouble. And there's no other way around it. You will be in trouble. So it's good that the young man finally learned a very valuable lesson, and especially back then, 1992 was crazy. Now let's deal with some stuff here. I want you guys to put on your big girl pants, put on your big boy pants, because we need to now get a little bit more serious because we have a big problem going on here, and it's getting dangerous. All right, it's getting dangerous. All right, the Borg is alive and well, ladies and gentlemen. I never thought I'd see the day when publicly wearing a muzzle would constitute a proof of virtue in the same country whose government less than 20 years ago rationalized the bloody invasion of Afghanistan as a way of saving women from veiling their faces. But then I never thought I'd hear American liberals proudly denounce supporters of the U.S. Constitution as a death cult, nor that I'd actually start to find Donald Trump sounding almost reasonable. But at least there's one thing we can all be sure about. Mainstream news media, busily cheerleading for the death of freedom, will continue to gush with absurdities, self-contradiction, and victim-shaming memes in their propaganda war to keep America gagged. The Bill of Rights, in case you haven't noticed, is history. Today, we demonstrate our patriotism by creeping around, hiding our faces. Dissenters need not apply. If you think I'm exaggerating, I suspect you haven't been paying attention. Recently, I had the poor judgment to turn on National Public Radio for about an hour under the impression that I was going to learn something about the day's news. I could have saved myself the trouble. During the 1 hour in question, I learned nothing at all about the presidential election campaign, now in its final months. Nothing about the tens of millions of my fellow citizens whose jobs have been snatched away by government fiat. Nothing about climate change, nuclear arms building, international refugees, or growing worldwide poverty. Nothing even about the intensification of air and water pollution authorized by recent federal regulation, although pollution kills an estimated 100,000 Americans every year. Nope. For a solid hour, I heard the following. The COVID-19, in reality, at most, a moderately serious flu virus, is the worst medical threat the United States has ever faced. That this deadly virus, the word deadly, was repeated obsessively, even though the disease is fatal in a tiny percentage of cases, has been empowered by a conspiracy of Republican politicians serving the archdemon Donald Trump that recent data shows the rapid decline in deaths attributable to the virus may have been faked because the numbers aren't what the experts want them to be, and that a massive increase in COVID-19 tests, primarily among people between 20 and 40 years of age, who are subjected to swabbing because their employers demand it, not because they're in any danger, cannot possibly have anything to do with the rise in the number of reported infections, and that anyone who dares to suggest otherwise is putting lives at risk. But the real theme of the hour was masks, 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 masks. How to make them, how to wear them, the different types. Who doesn't seem to have enough of them? And why muffling our faces, even though no such thing ever demanded of us during dozens of past viral outbreaks, is absolutely positively good for all of us. I waited in vain for some mention of the fact that every single order requiring the wearing of muzzles in the U.S. is probably unconstitutional, a matter that National Public Radio, which once prided itself on its legal affairs reporting, might have been expected to care about. Nor did anyone mention that just a few months ago, the Center for Disease Control and Prevention was explicitly advising against a general wearing of masks, as was Anthony Fauci, the high priest of COVID-19. No, facts would only have complicated matters. After all, we already knew what good little boys and girls were expected to do with those muzzles at the close of each weather forecast, just in case anyone had missed the point. The reporter said cheerily, quote, and when you go out, put on a mask, end quote, and drink milk with every meal. I have expected him to add, but I guess self-conscious condescension would have spoiled the effect. Put on a mask. In well over half a century, I cannot remember a weather report that ended with a brisk piece of non-meteorological advice, let alone a patently silly one. After all, if these magical masks were to make any difference, their greatest usefulness would have been at the beginning of the outbreak, not on its heels. Yet, throughout March, while police state fever prompted the suspicion of democracy in some 40 states, and most of the United population was being hustled into viral house arrests, the pro-incarceration crowd's loudest voices unanimously insisted that masks were of no practical value. For anyone who had forgotten, Fauci told 60 Minutes that, quote, there's no reason to be walking around with a mask. When you're in the middle of an outbreak, wearing a mask might make people feel a little better, and it might even block a droplet, but it's not providing the perfect protection that people think it is, and often there are unintended consequences. People keep fiddling with their mask, and they keep touching their faces, end quote. He said that on 60 Minutes. And everyone has seemed to have selective amnesia and have totally forgot about that. They totally forgot about that. Really? Really? That was how things stood when the epidemic was new and all the stops were out. And now, contemplating the lockdown lovers' belated fetish for surgical gear, one can only imagine the U.S. Navy ceremoniously issuing an air raid warning at Pearl Harbor 100 days or so after the Japanese attack had wiped out much of the fleet. But you've got to hand it to the mass maniacs. No matter how many of their excuses for muzzling the population go the way of the Greek auk, they keep the new ones tumbling out so fast you can hardly keep track. And just a moment ago, wasn't there, oh, we have such a lack of equipment. We don't have any masks. We don't have this. We don't have that. And then the next day, now you have an oversupply. Here's one peddled on July the 14th in the Los Angeles Times. Even though the mask won't really prevent infection, they may reduce the amount of virus you breathe in. That is, just in case you happen to come across an infected person who somehow manages to breathe into your mask's face from a very short distance and for an extended period. No one cited in the article bothers to discuss how often such a scenario is likely to occur. According to Dr. Monica Gandhi, quote, there is this theory that facial masking reduces disease severely, end quote. In other words, you'll get COVID-19 with or without a mask, but the effects will probably be milder if you muffle your face. But again, this is contradictory because they said it wasn't airborne. They said it was surface to surface, not airborne. But now you're basically admitting that it is airborne. See what I'm saying, guys? But wait a minute. Even if this theory is correct, note that it contradicts everything the propagandists have been telling us about masks for the last 3 months. Wasn't it always the case that overwhelming majority of those who catch COVID-19 have very mild symptoms or no symptoms at all? So what's the big advantage of masks if they claim everyone has it and is walking around with it with no symptoms? So if you get it and you don't know you have it and you have no symptoms, what's the whole big idea for? What's the lockdown for? And what's the advantage of wearing a mask? The article is silent on that point. And Dr. Gandhi herself ultimately admits that her theory remains unproven. But that doesn't stop the Times from lambasting a few local Californian officials who have raised inconvenient questions about the mandatory muzzling. The anti-mask rhetoric is mind-blowing, dangerous, deadly, and polarizing. The article quotes Dr. Peter Chinhong as responding, why? Because masks prevent infection? No. Because they save lives? No. Criticizing the muzzle mandate is deadly because, wait for it, because, quote, there's no evidence that wearing a mask is dangerous. Well, actually, there is such evidence. Anthony Fauci admitted as much to 60 Minutes in March. But the main problem with this retort is that it misses the point. People are being forced to mask their faces in public without any evidence that it's dangerous not to. Again, using flawed models, flawed systems. Dr. Chen Hong's implicit confession that this is so knocks the stuffing out of the mandate and the Times rationale. But to say so openly is dangerous, deadly, that there's favorite adjective again, polarizing. It's no accident that the symbol of submission currently in vogue is one that covers the mouth. The real message of the mass maniacs is that we have no right to say what we think. All right? Notice how it had nothing. They didn't say, wear eye protective gear or, wear a hazmat suit or whatever. No, they said wear a mask because a mask is a muzzle. A mask covers your mouth. You have no free speech, ladies and gentlemen. And that's what they really want you to know. You do not have a right to open your mouth and talk about anything. And speaking of polarizing, what about the personal viciousness to which mask mania so frequently descends? I have lost track of the number of videos circulated by so-called news outlets that depict frustrated shoppers losing their cool over being forced to dress like mummies. Apparently, this is supposed to be cute, as in, get a load of that stupid Trump-supporting idiot having a public meltdown. Myself, I feel sorry for these people. I share their exasperation and am empathize with them over the invasion of their privacy. As for the propagandists who peddle this nonsense in support of governors turned dictators, I edict them as heartless hypocrites who claim to value our collective welfare and prove it by publicly humiliating their victims. Would they take similar pleasure, I wonder, in mocking the reaction of a black shopper who just been called the N-word? And it gets worse. In the upside down world of COVID-19 media values, even death is no protection from victim shaming. Recently, American news organizations reported the death of an Ohio man who had the misfortune to die on July the 4th of what they gleefully called complications of COVID-19. More than 2 months earlier, the victim had posted a comment on social media saying he wasn't going to buy a mask. The articles, which even named the deceased, who is a combat veteran, practically salivated over the fact that he had the audacity to go to a swimming pool in mid-June where he may have contracted the virus. You see, screamed the reporters, moralizing subtext, the maskless, self-indulgent right-wing jerk got what he deserved. See what I'm saying? Isn't that jacked up, ladies and gentlemen? Just for the record, let me know there are a number of things we don't know. We don't know whether the poor man actually wore a mask or not. He wrote in late April that he didn't intend to buy one, but that's really not the same thing. We don't know how he actually caught the virus. We don't know whether he could have been saved with better treatment. It's even possible he waited too long to seek medical help. Given his youth and the apparently lightning pace of his descent into serious illness, his death from COVID-19 is so highly unusual that its medical significance amounts to another thing we don't know. More important, we don't know whether wearing or not wearing a mask had anything to do with his death. If he was infected while at a swimming pool, I doubt even the mask maniacs would insist that he should have worn it in the water. What we do know is that he was targeted for savage personal attacks after he died, first on social media and now in the press. Quote, people have come out of the woodworks posting nasty, hateful comments about a man they knew nothing about, one of his friends had said. Most of it crossed the line into harassment when reported to Facebook. Nothing was taken down, nor was any action taken, he added, while those that defend him face consequences from Facebook in the way of bans. So hate speech against him was okay. You just couldn't speak out against the narrative. Well, at least the pattern of the propaganda makes sense in a way. Slander and nonconformist, and you can get away with murder. Defend him, you're silenced. Even the New York Times resident, progressive Michelle Goldberg, has taken up the cry. Another Trump fan has become a macabre cliche by dying of a disease she blames him for contracting. I wonder whether Ms. Goldberg would be smirking about a woman who was raped some 2 months after posting a comment to the effect that I'll go wherever I want and dress however I want, end quote. My guess is that the analogy hasn't occurred to her. She knows her job and it's about propaganda, not consistency. And the propaganda's bottom line is as clear as it is grim. Forget about your personal liberties. Forget about the democracy you thought you were living in. The mask, the symbol of fear, of arbitrary rule, of the abolition of normal social life, of voiceless submission isn't going away anytime soon, nor is the police state that sponsors it. Quote, There's going to be no summertime with the big wave in the fall, says Eric Toner, one of the boffins of the Johns Hopkins Center for Health Security, a partner of the non-liberal American Enterprise Institute that has been instrumental in promoting lockdowns from the start. It's clear that we are having a significant resurgence of cases in the summer, and they'll get bigger, and I'll keep going until we lock things down again, end quote. I can't believe he said that out of his mouth. And how long before the cycle of incarceration really ends? Several years? Toner says blandly, adding the sinister afterthought that people who resist being muzzled will get over it. It's just a question of how many people get sick and die before they get over it. Makes you feel kind of warm and protected, doesn't it? Think having people like Toner know our needs so much better than we do. The media ubiquity at the Johns Hopkins Center for Health Security is another ominous feature of the current wave of propaganda. Last October, the center ran a coronavirus pandemic simulation in New York City, co-sponsored by the World Economic Forum and none other than the Bill and Melinda Gates Foundation, for an assembly of powerful people in business and government, after which its members openly speculated about the possible need for censoring social media content on the theory that misinformation and disinformation are likely to be serious threats during a public health emergency. Now, these facts obviously bear on the organization's motives and credibility, at the very least. But you won't hear them mentioned when the center's data are repeated as fact in mainstream media, nor when its members assure us that we don't wear masks for the next 2 years until we drop dead. It is unreasonable to hope that reporters might want to explore why health security is presumed to entail censorship, or whether the huge investment of the Gates Foundation in vaccine development has any influence on its partner organization's bleak predictions for escaping the coronavirus without a new vaccine, or whether, having insisted first on devastating lockdowns and now on worthless face masks, the center will use its political leverage to demand mandatory vaccination when the time comes. And yes, they're coming for your arms. They are coming for your arms. They already came for your jobs. Now they're coming for your arms. And you may not even have a choice as to which arm, the right or the left, that is going to line you up and jab you in the arm with a vaccine that has not been tested. That's right, folks. Do not expect there to be no extreme side effects and consequences and ramifications and repercussions when you take the jab. Straight up. Straight up. Professor Lawrence Gostin is another worrisome presence in the media, including Michelle Goldberg's recent sanctimonious outburst in the New York Times, where, pretending to describe the consequences of the virus, she catalogs the devastation of the lockdowns instead. Quote, a record 5.4 million people lost their health insurance between February and May. A generation of American kids will have their educations derailed, and many parents who don't lose their job due to the economic crisis will see their careers ruined by the demands of childcare. The psychological consequences alone will be incalculable. Even before the coronavirus, researchers spoke of loneliness as its own epidemic in America. A March article in the medical journal JAMA Psychiatry attributed 162,000 deaths a year to the fallout of social isolation. Now people are being told that they can socialize only under the most stringent conditions. Much of what makes life sweet is lost to us, not for days or weeks, but months or years. As was stated earlier, this is a chillingly accurate summary of the consequences of the mass incarceration foisted on us by more than 40 state governors, most of them Democrats, beginning in early March, when each one, with a unilateral declaration of a health emergency, seized quasi dictatorial powers, shunted aside the Constitution, and bankrupted the citizenry. Those emergency powers have not been relinquished to this day. Did you guys know that? Did you know that? The emergency powers have not been relinquished to this day. We're still under the Emergency Powers Act. They voted themselves dictatorial powers. It's not bad enough that we got over 2 million people incarcerated in the United States of America. No, that wasn't good enough. They needed to incarcerate the rest of us. So 400 million Americans were incarcerated during the first few months of 2020, held under house arrest. By neither Goldberg nor her hero, Professor Gostin, offers a single word of criticism for any of those governors, and certainly not the Democratic Party leadership that has backed this democracy-destroying, economy-wrecking madness at every step. For them, everything is the exclusive fault of one man, Donald Trump. You see what's going on here, folks? Do you see? From Goldberg, that might be just another election year screened against an incumbent the Times dislikes. But what about Gostin? Well, although Goldberg never mentions it, Professor Gostin just happens to be the author of the model version of the Emergency Health Powers Act, the adoption of which in all 50 states, if in somewhat different versions, made possible the coup the governors pulled off by claiming emergencies several months ago. It's worth remembering that Gostin's proposed bill was sharply criticized by the American Civil Liberties Union back in 2001 as replete with civil liberties problems and a throwback to a time before the legal system recognized basic protections for fairness. In fact, some of its specific objections to the EHPA deserve quoting at length in light of where the Act's reckless application has brought us today. One, it fails to include basic checks and balances. The Act would grant extraordinary emergency powers, but that kind of authority should never go unchecked. Public health authorities make mistakes, and politicians abuse their powers. The lack of checks and balances could have serious consequences for individuals' freedom, privacy, and equality. The act lets a governor declare a state of emergency unilaterally and without judicial oversight, fails to provide modern due process procedures for quarantine and other emergency powers, and contains no checks on the power to order forced treatment and forced vaccinations. Two, it goes well beyond bioterrorism. The act includes an overboard definition of public health emergency that clearly does not justify quarantine, does not justify forced treatment, and does not justify any of the other broad emergency authorities that will be granted under the act. And third, it lacks privacy protections. Remember, I told you last week and the week prior to that, I said you can say goodbye to HIPAA. The act requires the disclosure of massive amounts of personal identifiable health information to public health authorities without requiring basic privacy protections and fair information privacy. Again, can you say goodbye, HIPAA? That not only threatens to violate individuals' medical privacy, but undermines public trust in government activities. So now you don't just have to go to the pharmacy to hear them call your name and say, well, Mr. Smith, please come to the counter. Your prescription for explosive diarrhea is ready. It's not hard to see why Ms. Goldberg is reluctant to give us the accurate backstory for her star witness. The ACLU's list of warnings about the potential abuses of the law Gostin himself drafted is a near perfect precise of what has actually happened. Unilateral declaration of an emergency, state by state, when none really existed. And are you going to see any one of these individuals or governors held responsible and held accountable? Nope. The seizure by which governor of almost unlimited power to order quarantines and forced vaccinations, the elimination of due process restrictions on mass confinement, the dismantling of privacy protections along with basic rights, all gone up in smoke, poof. Is anyone even concerned about any of this? Huh? So, what is everyone going to do about it? The coronavirus is just another flu. The real disaster has been the work of human beings. Resisting it must be too. People need to wake the heck up. You got to wake up. We have been lied to. We have been bamboozled, you guys. Bamboozled. Here's more proof of the bamboozling. Are you ready? Florida man who died in motorcycle wreck labeled as COVID-19 death by the state. Again, someone who died in a motorcycle accident, they're claiming COVID, saying he died of the COVID. Think about that for a second. We know that coronavirus death counts are being inflated. We already knew that. It's fraud. It's outright fraud. If anyone else did it, it will be considered fraud. We just don't know by how much. But after all, how could they not be when there is a financial incentive for states and municipalities to report deaths as coronavirus deaths? And for some states, there may even be political incentive. So they got financial incentive and political incentive to start misrepresenting death counts. So if you're only got a very small infinitesimal amount of people who are dying from coronavirus, what do? You take all the natural deaths and start changing the cause of death to coronavirus. Dude blows up in a factory explosion. Oop, death by coronavirus. How many people died in the explosion? 300. Okay, all 300 are coronavirus deaths. Let's go ahead and write that down. Which is why it shouldn't come as a total surprise when a man who suffered a fatal motorcycle accident in Florida last week was added to the state's COVID-19 death count. Fox 35 did an investigation where they talked to Orange County Health Office Dr. Raul Pino about 2 deaths of people in their 20s that were labeled coronavirus deaths. When they asked if the people who died had underlying conditions, Pino responded, quote, "The first one didn't have any. He died in a motorcycle accident," end quote. When he was asked about whether or not the motorcycle victims' data was removed from the state's COVID system, he responded, quote, "I don't think so. I have to double check. We were arguing, discussing, or trying to argue with the state, not because of the numbers. It's 100. It doesn't make any difference if it's 99. But the fact that the individual didn't die from COVID-19, died in the crash, but you could actually argue that it could have been COVID-19 that caused him to crash. I don't know the conclusion of that one," end quote. It seems to stand at odds with how Florida Department of Health explained how they were reporting COVID deaths in the first place. The state had told Fox a COVID death is determined if COVID-19 is listed as the immediate or underlying cause of death, or listed as one of the significant conditions contributing to the death, or if there's a confirmed COVID-19 infection from a lab test and the cause of death doesn't meet exclusion criteria like trauma, suicide, homicide, overdose, motor vehicle accident, etc. The only thing I can say to people is the data I provide you with is the data we consume from the state. We offer you the best data that we have, Pino concluded, copping out. End quote. And for those wondering about how COVID deaths are being counted, this April interview on Fox News with Dr. Scott Jensen does a good job of explaining just some of those issues. Yep, we've been lied to. We've been bamboozled. It's just what it is, folks. It is what it is. You can't make this stuff up. It's right in your face. And if you speak out against it and enough people listen to you, they will come for you. Just ask Michael Savage. Ricin and bombs. Police investigate psychotic death threats against Michael Savage, the dear old man who has been on talk radio forever, who is also a physician, and I happen to thoroughly enjoy his broadcast. San Francisco police are investigating death threats against conservative radio host Michael Savage, which he says are the most profane and twisted he's ever received, according to Breitbart's Josh Kaplan. The 78-year-old received a postcard and an email over a 7-day period. The postcard postmarked in San Francisco reads, with redactions, on the road to XXX, Michael could get hit by road ragers. Your sister, P.S., enjoy your XX clerk, coughed on. Savage threatened with COVID contamination and car wreck. Anyone know who sent this? And there's a picture of it. And it says the email sent via Gorilla Mail, a service where received emails are deleted after 1 hour, is far more explicit and contains violent anti-Semitic murder fantasies against Savage, as well as President Trump and his family. Excuse me. In a telephone interview with Breitbart News, Savage said an anonymous individual replied to his appeal for information on July 13th, emailing a death threat containing anti-Semitic, violent, and sexually explicit content. The email also contained threatening language directed at President Donald Trump and his children. Asked if he was concerned for his safety, Savage said that while threats are par for the course if you're a high-profile conservative in the media, he's never received such a profane and twisted note in his over 2 decades in radio. Unbelievable, you guys. Unbelievable. Now, according to Savage, San Francisco detectives have notified the U.S. Secret Service of the threats to Trump and his family, while Savage told Breitbart that he's personally notified members of Trump's inner circle of the threat. And there's even a picture of Michael Savage taking a picture with Donald Trump. Savage, whose nationally syndicated talk show boasts more than 7.5 million listeners across 400 stations, told Breitbart that he hasn't been to Alito's since it's been closed due to the COVID pandemic, while he's been avoiding the Sicilian-influenced seafood eatery for over 9 months following a heart attack. Alito's has been closed since COVID struck, said Savage, adding, it's been open for over 90 years and has been through 2 world wars, though it may not survive California Governor Gavin Newsom's lockdowns. This is nothing new, Savage said to the threats. Hitler used some of the sickest people in Germany to kill Jews. There are legions of people attacking people. Just look at the protests we see today. They're turning the country into a burning cinder. First, they go for the free speakers, then the First Amendment, and on to the Second Amendment, he added. It doesn't happen overnight. The key is to silence the opposition akin to insurgencies like we saw in South Vietnam during the war. This isn't the first time Savage has been targeted. In 2017, a man allegedly followed him out of Sorvino's Italian restaurant in Tiburon, California, shoved his dog, and shouted something at the radio host dubbed the godfather of Trump mania. Another customer who intervened was punched in the face by Savage's alleged assailant, according to the Mercury News. Both men claimed the other started it. Again, we live in a world now where people have been successfully brainwashed in the United States, and now they are under MK Ultra mind control and can be triggered to they can be triggered into a violent rampage at any moment. All they have to do is hear you say certain words and it sets them off. Doesn't matter the context of the words. All that matters is that they hear the words and then they go off on a violent rampage. Unbelievable. You don't have to like Savage. You don't have to agree with everything he says. But violence against a man just because of what he said, he didn't threaten you and your family. So why are you beefing with an elderly gentleman on the radio? He didn't say death to you and your family. He didn't say I'm coming for you. I'm sending goons after you. It's not like that. You don't have to come at this man. He didn't do nothing to you. So now you big and bad because you were able to accost an elderly man at one of his favorite eateries. That makes you hard. See what I'm saying? This is what we have been reduced to, you guys. I'm telling you, it's crazy what we're dealing with right now. It's crazy. I never would have thought that I would see the day that these situations were going down. But it is. People have lost their minds and lost their ability to think in America. And I have to tell you, they're in for a rude awakening. There will be no Merry Christmas this year because you're going to have the possibility of 100 million people unemployed. All they have to do is lock down the entire country one more time, and that'll be a wrap. That'll be a wrap. I'm telling you straight up, that will be a wrap. So you don't gotta listen to what I'm saying, but it's coming. They're preparing you guys for some stuff. They really are. They're preparing you for the complete takedown of the United States of America. That's what they want. They want to bring in total tyranny, and they want to be the ones that's doing all the tyranny. All right, so don't let it happen, man. I think that the people, this is the time that people need to speak out and speak up and say we're not going for that. We're not just going to lay down and just take that. All right, we're just not going to do it. We're just not going to do it. We're not going to make this easy for you just to come in and just take over like this. And then not only that, but while people aren't paying attention, the U.S. is gearing up to go to war with China because the U.S. is desperate. They're desperate and they're running out of options. You need to understand what's coming, folks. The end game is not going to be pretty. And the messed up part is they know what it is that they're planning. You are the ones that don't know what lies ahead. You guys don't know. Those of you who are protesting and marching and wreaking havoc, you don't know what's going down. You don't know what they got going on for you. They got something coming for y'all. Y'all need to know it. They're coming for you. And I'm telling you, all of you who have participated in the violence and the mayhem, they got something for y'all. They coming. And you ain't gonna like it. But they're gonna put all of you in FEMA camps, round y'all up, because that's what they do. That's the game they play. You just don't know it. All right, you don't know it. Now they want you to think that this is going to be the end of capitalism, but it's not the end of capitalism. All right, it's not. Capitalism is what makes people money. They're not going to allow it to go away. At the end of the day, we're all gonna have to deal with this. Now there could be it could be a situation where You do away with a lot of the corruption behind capitalism, but at the end of the day, it's what makes people financially rich. You know what I'm saying? All right, so we got to deal with this again, and there's really no nice way to say certain things, but we're gonna have to deal with it. Okay? No one's really talking about this either, but we're gonna have to deal with this. They're coming for your pensions, ladies and gentlemen. I wish it wasn't true. I wish I was wrong, but unfortunately, I'm not wrong. A lot of elderly people and retirees are living off of their pensions. And a lot of them, some of them get pretty good, decent pensions, right? Especially those that work for the state or work for the Fed or whatever. I'm just saying, man. During times of financial disruptions, defaults rise in importance and move front and center. Look at ticker IYR for the commercial real estate, ticker IYR, the ETF. You'll learn all you need to know what's really happening, despite the jawboning in mainstream media. The term financial crisis is applied broadly to a variety of situations in which some financial assets suddenly lose a large part of their normal value. A default falls into this area. In the last decade, debt has soared across the globe. We're well aware of that. With this in mind, you never want to be caught on the wrong side of a debt default. That is the place where you don't get paid or are paid with less. You don't want to get paid with a less valuable currency that has seen its value eroded by inflation. All right? You don't want to see that. You don't want that. But that's analogous to having $100,000 in the bank on Friday, and then on Monday they tell you only got $20,000 in the bank. A debt default can take many forms, but what they have in common is they all can be considered as reneging on financial obligations. Generally, we make a distinction between public and private debt, but even that may become blurred when a government in need of funds has to seize or take over assets or take over institutions. Did you hear me? When a government is in need of funds, not uncommon for them to seize, take over assets, and or institutions. An area of great concern should be the growth in non-recourse loans. This includes unsecured personal loans. The fact that these are particularly dangerous has not discouraged many investors from becoming seduced into thinking the yield justified rolling the dice and putting at least some money at risk. And at risk it is. If you examine how intangible assets have grown, you should be cautious that if you are owed money, that falls into the area of an intangible asset. The problem is that lenders will find little help in recovering their money from an expensive legal system that has become overwhelmed by the complexity of modern life. An example of this is explored in a recent article by Mish Shedlock, who reported how changes in the bankruptcy laws have made it easier for small companies to now file and sidestep their debt obligations. Thanks to the Small Business Reorganization Act of 2019, or the SBRA. As of February the 19th, 2020, new rules make it easier for small businesses to file for Chapter 11 and to simply walk away from obligations. The law is the most significant change to the bankruptcy code since 2005 and bodes poorly for those thinking a contract is still a binding agreement. Now, here are some of the SBRA highlights. that you should be familiar with. It applies to businesses with $2.7 million in liabilities, and that will be raised to $7.5 million in liabilities under the coronavirus stimulus. You never heard them talk about that now, did you? Owners continue operating their businesses while in court. Owners can retain equity after exiting bankruptcy. Owners can modify residential mortgages if a home was collateral for a business loan. Faster turnaround to save time and minimize legal fees. Owners generally have 3 to 5 years to repay creditors, and creditors can be paid based on a business's projected income. Now, legislation that allows easy bankruptcy protection is a gift for anyone wanting to plot a course forward by exploiting those stupid enough to loan them money. This includes landlords and suppliers willing to extend them credit during hard times. To be clear, a default results in a transfer of wealth. Once again, a default results in a transfer of wealth. This is not always clear in that the party to which the wealth is transferred may have already squandered it. This means it only reduces his financial obligations. Making it easy for someone to run up obligations and not meeting them undercuts the idea we as a society must take responsibility for our actions. Well, hey, they're just doing what they see daddy do. Daddy government has never ending debt, running deficits for decades. So if it's good enough for daddy, it's good enough for me, right? It is also important to make a distinction between public and private debt. Many investors have become seduced into thinking the backing of government adds tremendous validity to both the explicit and implied warranty that come with government-backed instruments. History, however, has shown public debt can also be mishandled in several different ways. Quite interesting, isn't it? Yeah, see, when you go deep and you break down the mechanics and machinations of things, you really get a clear picture and a clear understanding of what's going on. One way or one example from the past was how Henry, in addition to engaging in an epic debasement of the currency, seized all the Catholic Church's vast landholdings. While not strictly a bond default, actions such as these, accompanied by imprisonment or even executions, can still be considered as reneging on financial obligations. It is difficult to argue this doesn't constitute some kind of default. Now, inflating away debt is another form of defaulting on debt. Once again, inflating away debt is another form of defaulting on debt. We should consider the possibility that inflation has been kept in check primarily because we as a society have invested a large percentage of our wealth into intangible products or goods such as stocks, bonds, and even currencies. If faith drops in intangible promises and wealth shifts into tangible goods, seeking safety, inflation would soar. This would drive interest rates upward and result in massive losses for bondholders. To give you a sense of what this may mean to U.S. Treasury bond investors, a 10-year Treasury bond issued at a 2.82% interest rate could see a 42% loss in the value from a mere 3% rise in interest rates. This means if you had held $100,000 in these bonds before rates rise, you would only be able to sell those bonds for $58,000 in the secondary market. Please note that the $58,000 you get back would also be affected by a loss of purchasing value lost from inflation. Do you get how this works now? Are you starting to get the picture, the overall picture of how you can inflate away and how inflation erodes purchasing power? Now, a debt default that results from the collapse or failure of an institution, financial mechanism, or even a financial instrument, and can result in a rapid shift in the value of assets. This has been witnessed time and time again as a stock suddenly becomes worthless. All right, one, two, three. Repeat it with me, class. Say Enron. The word collapse has a way of conjuring up the image of something falling or crashing, but it is important to note subtle details of the way this occurs can have a great effect in the damage it creates. Now, many of the economic crises we encounter in our complex modern world have the potential to spread from one institution to another, creating a contagion and resulting in a destructive domino effect. The massive derivatives market that is touted as one of our modern financial tools is often cited as having the potential to wreak havoc in this way. Defaults often fuel the collapse of what some people labeled as Ponzi type schemes. Underfunded pension funds can be considered in this category. Ponzi scheme can be applied to underfunded pension funds. Pensions and promises will be broken, so get ready for more pain. This is especially true in the public sector, where the 25 largest U.S. public pensions face about $2 trillion in unfunded liabilities. One reader or another site compared pensions to a Ponzi scheme where benefits are paid out to its investors from new capital paid to the operators by new investors rather than from profit earned through legitimate sources. I fear the future will prove him mostly right. The financial stress caused by defaults is another, often the final straw that brings collapse and causes things to cave in upon themselves. Speaking about unfunded liabilities, one thing is clear. We're only beginning to see the tip of the iceberg when it comes to this growing problem and just how many pensions are severely underfunded. This is a problem that exists all over the world. Remember the PBGC, America's safety net for failed pensions, has far less in the way of total assets than liabilities. A message from the head of the PBGC in the 2019 annual report states the corporation is in difficult financial position today. He goes on to say, without reforms, our multi-employer insurance program, the backstop that is the last resort for retirees when a plan fails, is very likely to become insolvent in 2025. Leaving participants and beneficiaries with significantly less than the level of benefits guaranteed by the PBGC. This is devastating news, folks. They said by 2025. When they put it out like that and try to make it, lessen the blow, so if it's 5 years out, 5 years is a long time. Things can change between now and then. Blah 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 blah, say blah. What they really mean is it's happening right now. It's on the verge of collapsing right now. A bank bail-in is another way to disguise a massive default, and it can happen here in America. An example of just how delusional we have become as to the fragility of our financial system is that many people have taken comfort in the efforts to control the banking sector through legislation following the 2008 crisis. The Dodd-Frank Act of over 2,300 pages allows this under Title II by imposing the losses of insolvent financial companies on their common and preferred stockholders, debt holders, and other unsecured creditors including, wait for it, including depositors. When I said that, you should be quaking in your bones with images of John Corzine dancing through your mind. Many who have read the blogs have indicated they strongly feel a major financial reset will take place in the future. Those invested in bonds should not underestimate the power of inflation to strip them of their wealth. Never before do I remember seeing so many predictions of interest rates remaining low forever and a day. We should have a problem lending hard-earned money out for lengthy periods, and we should be wary. Rates are based on predictions of future government deficits and events around the world that may or may not unfold as expected. Part of the conundrum we face is that far more freshly printed money has flowed into the system than new tangible assets created to back it. An issue that merits far more attention than it gets is the massive role our government plays in the economy. I contend that in the case of a financial crisis brought on by a large number of defaults, it will act as a net under the economy, making painful deflation unlikely. This means, in the end, those in power and control of the financial system are more likely to engineer an inflationary exit from this mountain of debt. As stated earlier, paying back debt with something of lower value is another way the system masks its default. So, as you can see, you can kind of say that wearing face masks is sort of a ritual preparing everyone for the reality of them masking the truth that's coming. Are y'all tracking with me? You get the picture yet? All right. Well, we're going to deal with some very serious matters on the next broadcast. We do not have time to get into them all today. Suffice it to say, though, you definitely don't want to get into the habit of missing the end of day reports. When I mean miss, if you missed a live, you can always go back and rewatch it. But you're going to want to start watching those, whether you watch it live or after the fact, doesn't matter, because this could come a little bit quicker than is being anticipated. And I just want to prepare you all for that, all right? So that being said, what you're going to want to do is get ready, because tomorrow we're going to really deal with some difficult things. And I just want to prepare you for that today. Today we touched on the surface. Tomorrow we go in depth. All right, so with that being said, PulseWaveTrading.com, you know what it is. You know what you got to do. All right, you know what you got to do. Come break bread with us. Come make as much money as you possibly can before the whole entire thing goes away. With that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. I'll see the rest of you in the trading room. And for everyone else, I will see you guys at the end of the report. Peace.